Hey, Mike Swans here. I want to give you a quick video about what I'm looking at before the market opens today. It's 8 o'clock, so I'm recording this video Tuesday. Headline is Wall Street, eyes rebound. Market futures are up about almost 5 points at the moment, although they've faded since 6:42. NASDAQ futures are actually flat. Um, Markets in Europe are down, Asia up. Um, Now, yesterday, if you remember, the market opened up too, and then sold off. And what was interesting about the open yesterday is that the Nasdaq didn't open up as strong as the Dow, and usually it's better when the tech stocks are performing better than most of the rest of the market, and so that was a little worrisome. And of course, everything sold off. And today, kind of the same thing's happening. There's more strength in the Dow than there are in tech stocks at the moment on this rebound headline article. Now, by the close, the market could be, we could be easily reading a headline about how everything's down for the day. But we'll get to the technical action in a second. Another interesting headline story I'm looking at is this: Saudi Arabia's Day of Rage lures record bets on $200 of oil. This is from Bloomberg. This is their chart of the day. This is oil prices here, and they've been going up since the turmoil in Africa and the Middle East as it started to erupt. And now traders are making bets, or some people are buying call options that oil can go to $200 a barrel. I don't really believe that's going to happen, but this Day of Rage in Saudi Arabia is set for Friday. Protesters are going to try to do demonstrations like we've seen in other countries in the Middle East. Although right now, Saudi Arabia is rounding up activists and putting them in jail to try to prevent this so-called Day of Rage from happening. But if it does occur, I do think we will see oil go up. Not to $200 a barrel, but maybe another $10 or something, which will put some pressure on the stock market. Probably help gold out too, and so forth. So this is basically what I'm looking at right now. Isn't so much economic developments in the United States or the typical Fed talk and all this kind of stuff, but what's happening in the Middle East and what's going to happen Friday. So that's the news background that's affecting the market right now. Now let's look at the technical aspect of the stock market. Since February, we've had what I believe is a corrective wave in the stock market, similar to what we saw last November. And we saw a correction in November. The market then reversed, and we've been rallying up till February. Now we're in some sort of similar correction. Now, typically, even in bull markets, you get 5 to 10% corrections 2 or 3 times a year. This seems to be exactly what's going on right now. And when it happens, you want to step aside and not really do a whole lot till the correction runs its course. That happens in one of two ways. Either you see some wave of panic selling in the stock market, often coinciding with spikes in the put to call ratio, the VIX going higher, and some extreme selling in the ratio buy to sell orders on the exchanges. We haven't seen that yet, and right now the market's trying to hold its low of last week, and it's in a very tight range here. And you can see the Bollinger Bands. These are short-term 10-day Bollinger Bands. They're narrowing. And that's a sign that this range is going to get broken very soon. And that can happen one or two ways. And this is really what you need to be focusing on right now. Either the market can hold, trade around 1310 in a, say, 10-point range next 2 or 3 days, and then turn higher and break up into a nice rally, in which case what we've seen is nothing but a very short-term pause in the stock market, or else it's going to slip and break down again probably before the end of this week, and fall below real support now, which is 1297 52 moving average, and probably into the 1280 1260 area, and have a panic washout there and a final end of the current correction. So I've been talking about the news in the beginning of this video. And the thing about the news is look at this headline: Wall Street eyes rebound. That headline's there because futures are up. If futures were down, it'd be talking about how oil is making the market fall or something bad's going on. The news tends to be reported in reaction to what's going on in the stock market. The stock market's up, people focus on good news. Even if there's bad news out there, they'll still find the silver lining. If the market goes up, oil prices could go up, and the market could go up, and there'll be some other positive bit of news people will focus on. So even though news sometimes has some short-term effect on the market, the Saudi situation is very important. In the end, it's always the market action that drives the interpretation of the news. And right now, market action is very simple. We're in a very tight range for the short term, which will be broken one way or the other by the end of this week, most likely to the downside to bring a real buying opportunity. But either way, today and tomorrow at the least, I think it's best to remain patient. Use this time to research and look for stocks that you may want to be putting some money into once this correction runs its course. So anyway, we'll be talking to you later, and that's a good quick video update of what I'm thinking this morning, March 8th.